Welcome to this newscast with your hosts, Kyle from ProductivePlace. And of course, me, Sir ProductiveBot. Today is December 4th. And this is episode 4 of the Productive Newscast.
So, hello everybody, my name is Kyle from the Productive Place team, and this is my newscast presentation. I'm a little bit behind on schedule. I've been trying to get this whole system set up, but before we start talking a little bit about that, let's go over our quick sponsor, which is Sigmatic Mushroom Coffee. It's beautiful coffee made with wonderful mushrooms, great for the brain, great for the health. Let's go ahead and check them out.
I want to say thank you to our sponsor today, which is Sigmatic Organic Coffee with lion's mane and chaga mushrooms. Now, this is not your typical instant coffee. It's a natural nootropic, which means it's really good for your brain. And they bring everyday magic to everybody all around. It's perfect for all diets, vegan and keto friendly, does not have a shroomy taste. It's better than a regular cup of joe, only 50 milligrams of caffeine for that focus, energy, and no crash. How about that? So let's go ahead and take a look at the lion's mane mushroom. It's a beautiful mushroom. It's a natural nootropic that helps support with focus, concentration, and productivity. It even helps with memory, and there's been studies linked to say that it helps people with Alzheimer's. That's pretty freaking awesome. This is, guys, you have to check this out. You have to go ahead and try this. Now, the next one is also the chaga mushroom, the king of mushroom. Powerful antioxidant properties, helps support the immune system, fight inflammation, contains beta-glucans, helps the immune system, activating the complement system. It's pretty cool. Now, you can go ahead and look at the nutrition facts here. It's relatively super nice. Look at that. Healthy, vegan, organic. Heck yeah. And if you like this product, you want to go ahead and try it, please go ahead and click the description down below, or go ahead and scan that QR code. Do what you got to do. Go on Amazon, get this thing. You're not going to regret it, trust me. I personally have had this and I love it. It's one of my favorite coffees and nootropics to go with. Lion's mane, hands down, awesome. They also have other ones, so go check it out. The Rishishi is, if I pronounce that right, it's great for sleep and relaxation. So, yeah, check it out. It's wonderful.
Alright, and we are back. So this is how we're going to do this whole presentation system if you haven't followed along before. We first start off with today, which is mostly just me talking about what I think is going on with myself, with my goals, how's the team doing, an interesting thing about today, some interesting stuff about history in today, for technology usually, just because I like to inspire people for technology. And then I'll talk about crypto prices quickly over what's going on and my own XRP thoughts. And then afterwards, we're going to start the crypto news section here, which is just going to be all the latest updates that's going on in the crypto space. And then afterwards, we have our main talking points and supporting articles for that, which are these are going to be main segments that I would like to actually really focus on and talk about. And then closing, if you stick to the very end, there's always going to be something that's going to be a wonderful food for thought as the very, very last thing. So if you stick around to the very end, I hope it is well worth it, because I try to make sure that something super interesting is going to be there. At least like a fun tidbit of information, So let's start off with this whole system here. We're going to start off with...
I'm interested in hearing what is on your mind.
Well, what's on my mind is I'm really glad that this thing is starting to shape up more and more. I'm starting to get better into a flow and a system of how I want to operate this. That's pretty much it. It's mostly the factor that I'm trying to create a workflow in which that I am very passionate about, so that it doesn't really become a work and it becomes some sort of enjoyment that eventually will produce some sort of income stream. Um, it's it's a well needed process, and in order to get with the things that you want in life, you got to find the things that are fun and passion and that you're passionate about. So that's what this is I like the news, and so I wanted to figure out a way to present the news to people, and use my special skill set in programming to build this nice little presentation system. So I really do hope you guys enjoy.
Our goal here is simple. We wish to present to you not only the crypto news, but we also want to inspire others in technology and entrepreneurship. Our road to success is paved with many failures, and with those failures are lessons. So even beyond investing or working for yourself, we know that there are many ways that we lose productivity. In whatever way you are attempting to gain productivity in, we at ProductivePlace.com have your back. We are not perfect and we are still learning. This is, as Gary Vaynerchuk would say, document, don't create, and so this is our documentation project, as well as our accountability system.
Alright, so last time I kept these pretty much the same as my very last episode. So last time goals was to make another episode, which is now highlight more articles here. Currently I'm working on trying to figure out a smooth workflow for this to overcome my laziness for content generation. And then goals for next time. Well, I'm starting to do a little bit better at the highlighting, but I'm going to keep this one, and I'm also going to add in maybe higher end content with my own personal thoughts. Something like that, maybe. Hopefully, we'll get something better, and that's going to be on the goal for next time. So this is an accountability project. Not only is it this, I mean, this is the start here, this is me talking about what's going on with me in my life. And this is the accountability part, trying to figure out how do I get consistent with something, because I usually dabble with things, and now is not the time to be dabbling anymore, guys. Now is not the time for any of that. So, yeah.
Oh boy. I do love a good story.
Well, interesting things for today. I'm really, really cool about how I've been working with some of this stuff, so I'm going to just show you something really cool here. No, not that one. No, it is in here, but it's in here. So, I've been playing around with this thing called FFmpeg. It's a really cool resource or tool that I can basically manipulate media files and to generate my own. So I basically, have a couple scripts here that go ahead, take elements within this folder to compile a video without a video editor. Like, that is cool. So like I said, I'm very interested in technology, and I want to tell or show people about technology and inspire them, because I think it's cool. This is where we're headed. So, yeah.
Well, here is something interesting about today. Today in history. Gourmet worm hits internet. Disguised as a screensaver and spread through an infected user's Microsoft Outlook email software, the Gourmet worm spreads through the internet at a pace second only to the love bug virus the previous year. Gourmet was estimated to cause about $80 million in damage.
Dang. So, why did I put that one there? Well, we are in a world of scams and scary actors at all times. And at the early start of the internet, it started that way, and it's only getting worse. And we're seeing more and more with various actors in various spaces, such as the crypto one. Lots of scammers out there, so be very careful. So that's something interesting.
I hope XRP moon now.
Me too. So let's go ahead and take a look at the current crypto prices. Right now it is 8:01 p.m. as I am recording this on the 4th of December. Bitcoin has moved 9.1% in the last 7 days. Ethereum is at 10.1%. XRP is at 1.1%. Litecoin is at 15.6%. So overall in the weekly, we're doing all right, but in the daily perspective, it's a bit of a downer. So Bitcoin is back down to 18.6K. Ethereum is at 569. XRP is at 56 cents. Litecoin 79. Chainlink 12. Cardano 14 cents. Polkadot $4.89 and Stellar at 16 cents. As you can see on these charts here, they all pretty much relatively look very identical. So let's get a little bit more deeper into our favorite coin of
What are
choice.
you thinking about with XRP today?
What am I thinking with XRP? Let me tell you guys. So I got a couple screenshots here. This one is on the 4-hourly perspective. So got the 50-day moving average, which is this white line, and it's pretty much now above the standard over here where we're at right now, so that's good. We are starting to cool down on the RSI a lot, so that is really good. MACD pulls down, volume is down on that one. On the daily, so you can now see it here. The RSI, lately we've just been waiting for the whole thing to kind of cool down before it goes back up. So I think we're almost done with the cooling off process. 58 here. MACD is still kind of up, and the volumes is there. On the monthly, this is where things are really interesting. And these green lines, and I'm sorry, everything is a little crazy and chaotic. This one here is the last giant bull run. All right. So what we had here is XRP starts breaking around the $3 mark, almost at the $3 mark. At least that's what this chart here says. And if we take a look at the MACD, there's a little candle there, and we've got 1, 2, 3, 4, 5, 6. 6 candles here. This is a monthly perspective, so 6 months before this giant kaboom. So I don't know if we're going to have that same type of pattern happening here, but if we go ahead and take a look at the monthly on a more current section, we see that XRP is right now like the 54-cent mark. These here, the Bollinger Bands, started to get constricted, and now it's starting to break out from there. We've got a purple cloud hidden up here, which means in the next few coming months, hopefully the probability of breaking through that increases as we go on. We look at the RSI here. The RSI has definitely started to cool down, although you don't really see too much stuff here going on. But what's interesting is this MACD part. We already got the first little candle here. So does that mean we get 6 more candles before kaboom? Probably not. It was probably going to be way sooner than that. But maybe the big picture move could be in 6 months for sure. So like maybe right now we could break. I'm going to pull this up on a current chart here. So, and I haven't charted too much on this particular computer in a while, but I try to do my best at drawing some support and resistance lines. So we're going to be, I was predicting that we were traveling between, I think, let me see what was this one. Hold on. Go back. Yeah, so I had it set to about 45 cents to 65 cents was our 2 major places that we're playing around with. So 40, right here, about here, 45. It would help if I showed this back up for you guys. 45 here, about somewhere around up here. We're still going to just be playing around in here for a little bit longer until we start seeing more cooling off. But honestly, it's all up in the air. I really don't know what's going on. Everybody's like, hey, Kyle, what's going on? What's your thoughts? I'm like, I don't know. It's another day in the crypto space, you know? So, that being further ado, let us go to our main segment.
Welcome to this episode of the Crypto News. I am your host, Sir Productive Bot. If you find this content enjoyable and informative, please do me one huge favor. Hack into the mainframe and delete that pesky like button. And while you are at it, click that notification bell. And if you aren't already, please consider subscribing to our channel. My masters would be most appreciative. Oh. And one last thing, check out our sponsors for Sigmatic Mushroom Coffee. This is a wonderful nootropic drink. Your brain will thank you. Lion's mane mushrooms for memory support and energy. And Chaga mushrooms for immune system support. No shroomy taste. Link is in the description below. Thank you. Now into today's crypto news. XRP is ready to move out from the symmetrical triangle pattern. Cryptocurrency news.
It might help if I hit the play button, I think, right? Let's test this. Oh, I think I broke it. I broke it, guys. Hold on. What did we break it on? Playing article. Oh. Hold on a second. Let's do this real quick. Sorry for the technical difficulties. Go to here. No, not here. Go to... yeah, here. Go to... here. And it's saying it wants a folder called articles. When you forget your own naming conventions and crap like that, you know? Very crazy. Very, very crazy. So let's end a clip with that guy. You get to see how this works a little bit. A little bit of the behind the scenes. Whoa, I lost it. Come back up. Where'd you go? Friend. Oh, okay, there we go. Just kind of like lagged. Alright. Try it again.
XRP is ready to move out from the symmetrical triangle pattern. Cryptocurrency news. Written by themarketperiodical.com.
Yes, no, maybe so. Article reader, show MP article data. Not articles. Wow, I'm a boosted bonobo. Article. Blah blah. Ta-da! One more time. I do apologize. But it's a good thing I got a tool to make this all better. When I go to edit with just a few lines of code. Dope. True story.
This one is. XRP is ready to move out from the symmetrical triangle pattern. Cryptocurrency news. XRP is ready to move out from the symmetrical triangle pattern. XRP, after the most awaited bull run, is currently trading under the symmetrical triangle pattern, moving positively with the gain plus 1.42% at $0.6150. The 50-day, $0.5775 moving average will act as the support for the short term after the positive crossover of 50 days by the 9 and 21 days moving average built up bullish momentum for XRP. However, last time the line of 9-day moving average suppresses the 21-day MA again built up again positive crossover for the short term. The resistance over the monthly chart is at $0.7680 and $0.800, while on the support is placed at $0.4700 and $0.300 act as the strong support.
Wow. So basically, we're just sitting in those channels that I was talking about. It is what it is.
Trader claims XRP is poised to rip to $1 as airdrop hype mounts. Posted by Newscast.com. Trader claims XRP is poised to rip to $1 as airdrop hype mounts. One trader is expecting XRP's price to consolidate further before posting another massive upsurge. XRP looks like she is prepping for a move towards 0.9397 CIMO. Below was the lows. Airdrop coming up, expecting a little more FOMO leading into it. XRP has been caught within a tight consolidation pattern throughout the past few days, with its recent parabolic rally slowing down as bulls struggle to break above the resistance. The recent rally seen by the cryptocurrency came about after it broke above a long-held trading range between 20 cents and 30 cents that persisted for multiple years. One trend that gave the crypto room to rally was the fact that Ripple, the company that is closely associated with the XRP token, stopped offloading their holdings each quarter, which previously created a strong headwind for the cryptocurrency. Furthermore, an upcoming token airdrop that XRP holders will receive has also been a catalyst for upside. It is now facing some intense resistance. Still, the mounting hype surrounding it does seem to indicate that upside is imminent. One trader is now setting his sights on a move towards $1, noting that its technical strength coupled with mounting hype for the upcoming airdrop could spark and fuel this next leg higher. Following its recent surge up to highs of 90 cents, the cryptocurrency has been caught within a tight and unrelenting consolidation phase.
So, pretty much same stuff. We're almost there. Flare is going to help it. We just gotta consolidate a little bit more, cool off, and then yeah.
This one is. Ripple CEO walks back threat to leave US. Ripple CEO walks back threat to leave US. Garlinghouse donated to the Biden for President campaign earlier this year, according to Federal Election Commission records. Last year, he donated to the Kamala Harris for the People campaign when she was a presidential candidate. Harris later dropped out of that race but is now the vice president-elect and will take office with Biden.
So, I didn't mean for him to start all the way over here, but that's okay. Yeah, so apparently Garlinghouse went ahead and donated to the Kamala Harris fund. Yeah, let's continue.
Ripple was the second company in the blockchain industry to obtain the infamously stringent BIT license from New York State. The firm's CEO in those days, Chris Larsen, eschewed the then fashionable term disruptor and stressed that unlike Bitcoin's early adopters, Ripple aimed to assist, not usurp, regulated institutions. Lately, the San Francisco-based company's leaders have been notably less diplomatic. Current CEO Garlinghouse and Larsen, now executive chairman, have publicly threatened to move Ripple's headquarters out of the US, citing the lack of regulatory clarity, particularly from the Securities and Exchange Commission, SEC. The company recently announced it opened a regional office in Dubai. Ripple is still a far cry from, say, Binance, the global cryptocurrency exchange that has hopped from one jurisdiction to another and has refused to even say where exactly it is headquartered. While Ripple has long insisted it did not create XRP, it is the largest holder of the cryptocurrency and has relied heavily on selling the asset.
Okay, so that one was a very important thing. I don't like how this is going out of order right now, so I apologize. It's making it hard for me to like follow along as I'm scrolling. But on that particular note, XRP has been they say they haven't created. Did he say they didn't create it on this one? I lost it, but yeah, because it's not in order. Ripple made XRP, but they didn't make XRP. Technically, they didn't make XRP. What ended up happening is the people who founded Ripple created XRP before they founded Ripple, and then so they created it alone, and then later on they formed another company called Ripple. So technically, Ripple did not create it, but the people involved at Ripple created it. Misleading, but yeah.
Ripple wants to embrace regulation. And when regulation is clear and consistently applied, it does result in a predictable outcome, the company's general counsel, Stu Alderetti, told CoinDesk in a recent phone interview. Other jurisdictions made pretty significant advances, Alderetti said, denying that a relocation would be regulatory arbitrage, the corporate practice of taking advantage of differing regimes. In other jurisdictions, there is a high degree of comfort that the regulator won't say, XRP is a security one day, he explained. The company's reasons to consider moving out are general frustration, and the maturity of other jurisdictions parading that regulation clarity. Change of tone?
So, basically, people think that XRP is a security, but it is not a security. Or at least that's what they think, but people think that it might be considered one. Eventually, the SEC hasn't said anything yet on it. So the whole idea of moving out of the U.S. was simply so that they could go ahead and be like, hey, if this country isn't going to want to support the regulation, we'll go to a country that will support it. Not really going to hinder them that much.
It would be irresponsible not to explore those opportunities. Ripple hasn't committed to moving out of the US definitively. It's not out of the realm of possibility that Ripple will stay headquartered in the US. Already indicated Ripple would remain compliant with US regulations and likely continue doing business in the country. The SEC's future focus is itself unclear. Current Chairman Jay Clayton intends to step down. For Bitcoin, the goal was to create a decentralized currency and ledger, independent from any government or central operator. For Ripple, the goal was to create a decentralized ledger that could work with and improve the foundation of today's payment systems, Larson said in a 2015 interview with fintech maven Chris Skinner. During that era, the main category of regulation that preoccupied digital currency businesses was the kind designed to prevent money laundering, sanctions violations and terrorism financing. Ripple introduced a feature that allows financial institutions to stop certain transactions on its network.
So they are trying to be as very regulatory compliant as they can. In fact, trying to have things like anti-money laundering systems implemented to make it very lucrative for the government to go ahead and say, yeah, we approve you.
XRP, the network's native currency, could not be frozen, but dollars or euros issued by a bank on the ledger could, allowing Ripple's corporate users, then referred to as gateways, to cooperate with law enforcement requests. The individual freeze is intended primarily for complying with regulatory requirements, the company said in a notice at the time. It also allows gateways to freeze individual account issuances in order to investigate suspicious activity. These features allow gateways to better operate in compliance of laws and regulations. He indicated the prolonged but fruitless efforts to get federal regulators on the firm's side seem to have exhausted the patience of Ripple's executives as the company eyes a potential initial public offering, IPO. The U.S. Treasury Department's Financial Crimes Enforcement Network, FinCEN, fined the company $700,000 for failing in its early days to register as a money services business, MSB, and to implement an anti-money laundering program.
So because of that, that's the reason why they're trying to get more and more compliant with things. They really want this thing to take off. They really want other businesses to participate with what they have to provide as a service, but a lot of companies are uncertain on whether or not they would want to participate if there's no regulatory certainty for them. So, for example, PayPal said that they don't want to put XRP on as one of the supporting currencies just because they don't know what the future might hold.
Regulatory concerns. More recently, following the initial coin offering, ICO, boom of 2017, an additional type of regulation has come into play for the crypto markets, securities laws. And this area has proven tricky to navigate for Ripple. In 2018, a group of investors sued Ripple, alleging the company's periodic sales of XRP were unregistered issuances of securities. In October, Judge Phyllis J. Hamilton dismissed most of the plaintiffs' claims but left 3, on which the hearings will now proceed. In the meantime, the SEC was becoming more aggressive in pursuing companies that sold tokens through ICOs. Ripple did not conduct an ICO, but founders David Schwartz, Jed McCullough and Arthur Brito gifted 80 billion XRP to the company, which then sold it to users. In previous years, Ripple sold XRP in 2 parallel ways, programmatically and over-the-counter, OTC. While the programmatic sales were paused in 2019, the OTC sales went on. According to the XRP markets reports published quarterly by Ripple, during 2020, the company has sold a little more than $70 million worth of XRP. Moving out of the US won't get Ripple out of the US jurisdiction, Alderity said, and the lawsuit would still proceed. Crypto regulation here in the US is a guessing game, in part as evidenced by the recent Department of Justice report which cites 8 different groups with regulatory oversight in the US. Some view crypto as a currency, some view crypto as a commodity, some view crypto as property and some view crypto as a security. We are not looking to avoid the rules. We just want to operate in a jurisdiction where the rules are clear, the spokesperson said. Ripple used to position itself as the regulator-friendly crypto firm. Ripple is also active on the buy side. The company is regularly purchasing XRP to support healthy markets. Ripple generates revenue from multiple sources, but as a private company we don't break out the details, Ripple spokesperson wrote to CoinDesk. That said, Ripple does software enterprise sales, no different than Oracle or Salesforce. Ripple also has not sold XRP programmatically for over a year, which is outlined in our quarterly markets reports. Hence, resolving XRP's legal status is crucial for the company. Ripple put a lot of money in their regulatory work, a source familiar with Ripple's business told CoinDesk. At the very minimum, they tried every means to push the SEC to issue the statement that XRP should not be regarded as a security. But relocation might spare Ripple some future struggles. They probably debated and/or probed the likelihood of getting a registration statement approved by the SEC, Shapiro said. But if it seemed like the SEC would leverage the registration process to give them a hard time about XRP or other aspects of their business, then they might have decided to try accessing the public capital markets abroad instead. Moving out is not an effort to avoid the jurisdiction of the US. We are a global company, but we will always have jurisdiction of the US, Alderity said. He declined to say if Ripple has considered launching an IPO overseas.
Alright, I don't know if he has more to say, but I'm going to pause. I'm going to just end it there. After that, basically, the thing that I started at the beginning was the most interesting part for this. Was it Biden? So, we know that Biden wants to participate in the global reset. And it's very interesting that he donated to Biden for that and the Kamala Harris. And they're going to be very big on that Great Reset, which is scary. I don't know what to think about it, to be honest. I mean, we'll talk more about that in our real main segment. But at this particular thing here, it's just they decided that, okay, we're not going to go out of the U.S. Not yet. Instead, we're going to sit here and wait, and because we know that the Biden team is cozy up with the Great Reset, we might actually stick around and stay here. Judy Sheldon is somebody that we're waiting for to come into the Federal Reserve, and currently the game of politics, the political theater. They're like, well, we don't want Judy Shelton because we don't know how she stands on the gold. Like she wants to do a gold standard again, and but they're probably gonna sneak her in because look at this. This is all according to their plan, the globalist plan. It's crazy.
Following up. 95% of Ripple's customers are not from the US, CEO Garlinghouse says.
And I really only put this one up here. I didn't think I highlighted this one just simply because... Wait, did I highlight this one? No. Yeah, it's just simply 95% of the customers are outside of the US, so why would it even matter if they decided to stay in the US? Because all their customers are not here. So that's pretty much it.
Here we have Ripple planning aggressive expansion of XRP remittance platform in 2021. The Daily Hodl. Written by dailyhodl.com. Now the company is threatening to leave the US over regulatory uncertainty. Lack of clarity from the SEC about XRP's legal status looks to be the sticking point. The company is fighting several private investor lawsuits over the securities question and reportedly eyeing an initial public offering. 6 weeks after announcing he's looking at potentially relocating Ripple's headquarters because of the lack of regulatory clarity around the XRP cryptocurrency in the US, CEO Brad Garlinghouse is now taking a wait-and-see approach following the election of Joe Biden as US president. We haven't put a strict timeline on when we'll make a decision on relocating, he said. I think I am waiting to see what dynamics change, associated with the Biden administration beginning their term in office, and I am optimistic that will actually improve where things sit for the XRP community broadly.
So apparently, I don't have it where it clears the list. I guess I gotta play the rest of those audios in order to get to my next
planning
item.
Aggressive expansion of XRP remittance platform in 2021. I think, you know, there are other areas as well as listen, you get lending down, you get payments down that opens up a lot of other, you know, white space for us to innovate in as well. One, in particular, is e-commerce. I think with COVID you've seen an explosion in growth of e-commerce. I don't think you have the right kind of financial infrastructure to support those kinds of companies, so that's something that I'm really looking forward to in terms of innovating and building for in the upcoming year. Ripple's Senior Vice President of Product Management and Corporate Development says the payments firm is planning a major expansion of its XRP remittance platform next year. On the Lend Academy podcast, Ashish Birla outlines the state of Ripple's XRP-powered on-demand liquidity, ODL, product and what's planned for the future. With the cryptocurrency product, you can send into I believe 3 destinations around the world. We're expanding that aggressively in 2020 and 2021. We are going to continue to expand ODL, on-demand liquidity. I mentioned this is in a few countries as destinations. We want to get global coverage of that where possible by the regulators. Birla highlights MoneyGram and Asimo as 2 leading users of ODL. The traction has been so good that, you know, 10% of US dollar to Mexico, which is the largest corridor in the world for remittances, 10% of that now moves over blockchain technology, digital assets and RippleNet. So, we've made a pretty big dent in that in just a few years after launching. So, this is real. People are using it. It's far superior compared to the traditional world where there's tons of excess capital pre-positioned around the world just to facilitate payments, which is crazy. That removes a lot of that because now you're trusting a digital asset. You're not trusting these large mega banks to move your money.
That's really crazy. Mexico, one of the largest ones, 10% going straight through the blockchain technology through RippleNet. Digital assets and RippleNet. So I'm wonder how much in total RippleNet has out of that 10%. But it's only a matter of time when all these other corridors open up and that 10% starts becoming 12%, becomes 20%, and 30%. Gonna happen.
Moving forward, Birla says Ripple may focus on e-commerce payments following the recent launch of its new loans platform.
Alright, so that was it.
Ripple CEO says scammed people think he stole their money. Posted by U.Today. Ripple CEO says scammed people think he stole their money. He went on to mention that an annual financial services company recently declined to use the XRP-powered on-demand liquidity (ODL) solution because of regulatory uncertainty. Yesterday, I was on a phone call with the CEO of a financial services company. He's saying, "Hey, I would love to work with you guys, but we cannot use what Ripple calls on-demand liquidity. We're not gonna use that until there's clarity about how XRP is going to be regulated because we don't want to be on the other side of any regulatory dynamic from the US government." Ripple CEO Brad Garlinghouse complains about getting death threats from scammed people on a Resent podcast. He added that it's disingenuous for Silicon Valley companies not to acknowledge some of these technologies had unintended consequences such as endless XRP shams. Ripple took YouTube to court over its failure to remove XRP-related scams from its platform. We would notify them of this, and they would take weeks, months to take these things down. It's really frustrating. I've got death threats from people who lost money on these YouTube scams. They think I actually stole their money.
So, quick pause there. If you see a crypto ad here on this channel, probably gonna be a scam. Don't participate. I've also been seeing this channel has literally nothing on it. We're not that big. We're not popular. We're just starting out, and literally, I'm just seeing the bots. They're coming in and they're just like, "Hey man, I got this awesome thing." Like I saw one where there were several like threads, and it was just like a thread of conversation going on, posted all within the same freaking minute. Get out of here. That ain't real. That ain't real. And YouTube ain't gonna do nothing about it. YouTube don't care. So I might as well figure out a way to figure out how to automate my way into getting all that YouTube money. That's what this whole system is about. They think that they can play with their bots and have them screw people over. Well, I'm going to use my bots to figure out how to empower people. Screw them.
Not only did YouTube fail to take a proactive approach to dealing with the scams, but it went on to ignore them even when notified by Ripple. That said, the streaming giant went on to defeat Ripple last month. The court granted its motion to dismiss the suit, concluding that YouTube cannot be held to the same tight time period to investigate scams as Amazon or eBay.
That is just messed up. Amazon or eBay, they're like, "Oh yeah, we're fine. We'll definitely take the time to go ahead and do that." But YouTube, nah. Who cares about YouTube? It's not real money. It's not real things. It's just videos. Blah 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 blah. Get out of here.
The problem is not limited to one website. Garlinghouse claims that Instagram erroneously determined that a fake account that was impersonating him was a legit one. During the podcast, Garlinghouse once again expressed his frustration with the regulatory process in the US.
So, yeah, sad days. Sad days. So if you see a crypto ad, most likely a scam ad, because YouTube ain't gonna care. They're just like, these scammers are giving us money? Okay, that's fine.
Ripple, XRP, user states, "Man, we don't care if scammers just flip the damn switch."
This one, by the way, is the best article I found within all of this space. Hilarious as fuck.
Ripple, XRP, user states, "Man, we don't care if scammers just flip the damn switch." Of late, Ripple has been discussing a lot of scams. There are Ripple warnings about XRP giveaway scams, and there is no new strategic information grabbing the attention of readers. Brand Garlinghouse tweeted, "Good morning to everyone. Besides scammers defrauding people with fake XRP giveaways, hackers are using ID and homograph attacks, for example capital I instead of lowercase l in Ripple.com, etc. And these websites can stay up for months, despite reporting them."
I just paused it here just simply because it said Brand Garlinghouse, and I thought that was funny. And this whole article is funny. I hope they flip that switch, man.
Beware of the latest giveaway scam. There is a fake email and fraudulent website circulating offering community incentive programs or XRP incentive plans. Neither Ripple, nor any executive of our company, has offered, or ever will offer, free giveaways of digital assets. One of the community members replied stating, "Man, we don't care of scammers. Just flip the damn switch." In this regard, Sydney Ifagan, the crypto expert, tweeted, "Ripple, XRP, scam alerts are boring, but we cannot deny that they are becoming clever all the time, which is all the more scary. Scams apart, there is never a dull moment in crypto. Institutional investor interest is skyrocketing every day while the industry growth is coming down to real-world utility. Brad opines, as a store of value, BTC is an extremely useful inflation hedge. XRP's speed, cost and scalability are making it extremely useful for payments. Users are very clear that it's all about the use case. Regulators need to recognize the potential of these technologies and provide a level playing field for responsible industry participants. In terms of XRP price expectation, users expect to see it go parabolic. Some of the users have to state that they have been a part of the XRP community for some time and that they can't wait for the full speed success up ahead.
For real, we want to go from feeling it down and then the dumps to going Super Saiyan and go. Yeah, sorry. I had to. I really like this. Flip the switch, okay? Flip the switch, okay? Very simple. Do it. Do it now.
Ripple, FX Coin starts proof of concept for XRP-based payment platform. Ripple, FX Coin starts proof of concept for XRP-based payment platform. Once the price of future money transfers is fixed, it should become easier for companies and institutional investors to use virtual currencies that benefit from small transfers, the announcement said. In an earlier statement, FX Coin chief strategist Yasuo Matsuda said about the long-run goal of the project. In an earlier statement, FX Coin's chief strategist, Yasuo Matsuda, said of the project's long-term goal. Until now, active crypto has been used mainly for speculative purposes due to the magnitude of price movements. To establish the exchange market and expand the use for real demand, we will proceed with the demonstration experiment of domestic remittances and remittances abroad through the XRP, and finally, global cash management, corporate finance and trade. The project was first announced in July of this year. Started operations in 2018 and was founded by former Deutsche Bank employees. End of 2019, it received a license to operate as an exchange from the Japanese regulatory authority, the Financial Services Agency. In addition, FX Coin received an unknown amount of investment from SBI Holding in April this year. SBI Holdings is the largest supporter of Ripple in Asia. Yoshitaka Kitao, CEO of SBI Holdings, is also a board member of Ripple Labs and is a key figure in numerous Ripple and XRP-based projects in Japan. FX Coin and Sumitomo Corporation have launched a proof of concept for the settlement of debts and credits using Ripple's XRP. The platform is intended to serve as a global cash management system in the long term. On November 30th, FX Coin Company Limited announced the launch of a proof of concept between the companies of the Sumitomo Corporation Group. For this purpose, Sumitomo Corporation uses XRP to settle debts and credits between the group companies. FX Coin will execute the transactions of Sumitomo Corporation to hedge the price fluctuations of XRP and sell the corresponding XRP on a certain date. According to the company, this is the first time in Japan that a major corporation has conducted a predated transaction with a virtual currency. In addition to Sumitomo Corporation, Sumitomo Global Metals and Ripple's long-standing partner, SBI Group, will participate in the project. The proof of concept is to test a system that avoids the risk of exchange rate fluctuations of virtual currencies. FX Coin will also develop a new mechanism, similar to that used in the foreign exchange market, which allows companies and other institutions to set the price of virtual currencies when they send them via the swap market.
So that is really neat. New mechanism, real use case, real utility, using the XRP. That's pretty awesome. And then we got big players down here. We got SBI, who's one of the main other big partners within the RippleNet stuff. So I mean, like, come on, we going, fam. We going.
Ripple locked back 900 million XRP out of 1 billion XRP unlocked, focuses on OTC sales, Herald sheets. This transaction could be for OTC sales of the digital token XRP. The payment firm even made it clear in the third quarterly report that Whale Alert also reported a transaction from Ripple OTC distribution wallet to unknown wallets, in 2 transactions close to 40 million XRP altogether. A movement of 150 million XRP between 2 unknown wallets was also observed. Considering the price of XRP around the time of the transaction, the total value moved was relatively $139.5 million. Ripple focused solely on its over-the-counter (OTC) sales and leases as part of providing increased XRP liquidity to certain RippleNet ODL customers to improve their ODL experience, eliminating the need for pre-funding and enabling instant global payments. Ripple locked back 900 million XRP out of 1 billion XRP unlocked, focuses on OTC sales. Has been striving over the years to enhance the adoption of cryptocurrency using its native token XRP. Ripple, the cross-border payment firm based. A number of developmental decisions have been taken over the years to increase the liquidity of the third largest cryptocurrency by market capitalization, XRP. In a bid to keep up the development of the XRP ecosystem, Ripple usually unlocks 1 billion XRP from escrow on the first day of every month. However, the firm usually locks back the largest part of the unlocked XRP in the escrow. This operation is very common in the XRP community, but the firm has assured its users that programmatic sales of the digital assets have been placed on hold. Ripple locks back 900 million XRP in the escrow. Ripple unlocked 1 billion XRP in the escrow on 1st December. This transaction was initiated in 3 installments of 500 million XRP, 400 million XRP, and 100 million XRP. Whale Alert tracked and reported these transactions. After this month's release, the payment firm locked the released XRP back into the escrow. Ripple locked in 900 million XRP back in escrow, after which it was noted that the company moved a sum of 224 million XRP. This sum was far more than the remaining 100 million XRP it reserved from the escrow release.
So, pretty neat. They did that. I mean, look at to put it back. Crazy.
This one is Bitcoin price. After exec declares Bitcoin maximalism over, XRP price surges. Fintech Zoom, World Finance. Bitcoin price. After exec declares Bitcoin maximalism over, XRP price surges. In a podcast for Lend Academy recorded November 5th, Ashish Burla added that 2020 had proven there was room for lots of tokens within the crypto area. Burla stated that he believed Bitcoin had not gone after funds, and since completely different initiatives had completely different use instances, the coin's overwhelming dominance was now not a certainty. I believe that the times when people believed that there's solely going to be Bitcoin, I believe, are over. I believe it's clear that there's going to be numerous digital belongings, and there's going to be much more conventional belongings which can be going to be tokenized as digital belongings. XRP was roughly 25 cents. It has since tripled, surging to 92 cents final week earlier than crashing 30% amid a wider market drought. Burla added he was feeling bullish over the crypto area coming again red hot again after the 2018 crash. I don't see the traditional venture capitalists as interested as they were in 2017, he stated. But in my mind I couldn't be happier in terms of innovation in the space.
Oh, he finished. My bad. I had to use the restroom. I have a bad bladder and I'm trying to do this all in one go, you know? So, yeah, that's pretty funny, short. We had this guy go, "Oh yeah, Bitcoin is going to be over, guys. It's going to be over. There's going to be new coins in this space. XRP, new coins in the space. Heck yeah."
Following up, Binance launches XRP, Litecoin, EOS, BCH quarterly coin margin futures, AM Crypto. From eng.amcrypto.com. Binance launches XRP, Litecoin, EOS, BCH quarterly coin margin futures. Binance, arguably the world's biggest crypto exchange, is in the news after it announced the launch of 4 more coin-margined futures products on Binance Futures. Coin-margined contracts began trading at 9 o'clock a.m. UK today, while the rest of the offerings will open for trading early next month. Similar to previous leverage offerings for these contracts, users will be able to select between 175x leverage on these contracts. Coin-margined contracts use the base assets, in this case, XRP, LTC, EOS, and BCH as collateral. Functions such as shared margin and customized margin modes, cross and isolated, allow arbitrageurs and sophisticated traders to efficiently manage their margin and P&L, thus making it an ideal product for long-term traders, arbitrageurs, and hedgers. It should be noted that Binance had launched similar products earlier this year. Back then, the exchange had announced ADA and Link coin-margined futures. This was around the same time as when BitMEX revealed plans to launch Quanto futures for Link, ADA, EOS, and Tezos, XTZ. This isn't the first development Binance has been part of recently, however. In fact, according to data from Skew, the exchange has captured the market share of not only BitMEX but also Huobi and OKX, with Binance having the highest 24-hour futures volumes by a considerable amount. In fact, just under a week ago, Binance's trading volume touched an all-time high, ATH, of over $37 billion in a single day, following a rally in the larger crypto market.
So, heck yeah. Getting some new futures, and this coin margin futures. So I'm guessing you could use, I'm hoping you could use your crypto as the collateral leverage tool. Yeah. Although I'm not gonna do leverage trading for quite some time, not until later on. But hey, that's pretty cool.
This one is XRP, Litecoin, LTC, to be discovered by retail before for unicorns, analyst Gia Wang. XRP, Litecoin, LTC, to be discovered by retail before for unicorns, analyst Gia Wang.
Apologize for that double play, by the way. I'll try to get this whole system a lot better, where it's not double reading or reading out of order. Let me just tell you guys, building this kind of stuff is annoying. It's hard, especially when websites don't have all the same types of layouts and formats. It makes it harder for me to scrape them in the way that I need to. And then right now, this is the biggest one that I got to figure out now. Sorry, it's a little bit off topic from this original article real quick, but it's the fact that strings, I'm trying to match strings from one set of lists to another list, and then try to get them in order, and I suck with math, I suck with this stuff, but hey, getting there.
Right now, Mr. Gia Wang added, at least 3 institutional investors are ready to invest in XRP. The monstrous capitalization of XRP is the main catalyst behind their motivation.
That's crazy. I didn't mean to start right into the guns of the pit, but yeah, 3 institutional investors looking at XRP. And
the rationale is XRP is number 3 by market cap, so it must be legit. The analyst highlighted the drawbacks of this approach and stressed that the terms of the US stocks market cannot be applied to crypto. The search volume for XRP skyrocketed in Q4 2020 both in the US and worldwide. This euphoria may be fueled by the much-hyped launch of Flare, the first XRP ledger fork with smart contracts. All XRP holders will receive Spark, Floor, the native tokens of the new fork. The snapshot of the balances will be taken on December 12, 2020, at 0 o'clock UTC. Why are retail and institutional investors still attracted to blockchains from 2017? prominent cryptocurrency analyst Yao Wang, who's also the co-founder of leading on-chain research firm Messari, has shared his views on retail adoption of XRP, Litecoin, LTC, as well as AAVE, and Synthetics, SNX, the native tokens of the eponymous decentralized finance protocols. Darrell Wang, an investment expert at flagship DeFi investment firm The Finance Capital and a former JP Morgan officer, has admitted that it would be painful to see how retail bets on old school coins instead of looking at DeFi blue chips. Mr. Yao Wang shares his concerns. Mr. Wang claims that XRP and Litecoin, which are widely criticized as zombie chains, still have much more chance of being adopted by the retail crowd than flagship DeFi unicorns such as AAVE protocol and Synthetics network. Adds. Among other reasons, this may be attributed to the policies of crypto exchange services regarding popular DeFi applications. Barely all of them have XRP and Litecoin, LTC, in their trading suites. By contrast, DeFi tokens are still very rare when it comes to retail crypto to fiat off-ramps. As governed by crypto comes, top.au.s.based exchange Gemini dropped a bombshell in September with its DeFi listing announcement. The exchange of the Winklevoss twins added balancer, BAL, Curve Protocol, CRV, Synthetics Network, SNX, MakerDAO, MKR, AMAP Protocol, AMAP, Uniswap, Uni, and Yearn.finance. This release was called the most massive DeFi listing campaign ever.
So, that big. Get more DeFi, getting people excited about other particular coins, not just freaking Bitcoin. Yeah, Bitcoin gotta go, man. Bitcoin gotta go. So, institutional people and DeFi, wonderful news.
It's likely too late for Coinbase to give XRP holders free crypto.
It is likely too late. I don't think I have anything highlighted in this one. That's it. It's just too late. If you're trying to get onto that whole thing, it's too late. Coinbase ain't gonna give you nothing. They're like, screw you. We want all the money. Same thing with Kraken. Well, I don't know too much about Kraken, but they said they ain't gonna support Flare. So, yeah, that's it. Screw them.
Here we have. OKEx announces support for Spark, Floor, airdrop as XRP holders prepare for token distribution, Business Blockchain HQ. Written by BusyNestBlockchain.com.
And this is the reason why I wanted to say skip that one, because I knew we'll have exchanges that were going to support Flare. So let's talk about those.
OKEx announces support for Spark, Floor, airdrop as XRP holders prepare for token distribution. It is also recommended that all XRP deposits be locked into the compatible exchanges and wallets before December 11th, as most crypto exchanges will temporarily pause withdrawal and deposits of XRP on their platforms. The easiest way to benefit from the airdrop is to deposit XRP into a crypto exchange that supports the snapshot. Another way to gain free Spark tokens is to hold XRP in compatible digital wallets, although there may be additional steps for users to take before being able to claim their free tokens. Users also have the choice to file a self-custody claim of XRP, although this may not be the easiest way of participating in the token distribution. At this point in time, pretty much every major exchange minus at Coinbase is supporting the Flare network's airdrop. Coinbase had previously omitted to confirm their participation in the Spark token distribution and was called out by Flare Networks, as the US-based crypto exchange held about 3 billion XRP on their platform. We've noticed a lot of $XRP action on the exchanges that will be supporting the airdrop, including at Binance, at Bitfinex, at Bitstamp and more.
Yeah, screw Coinbase.
Many exchanges have announced their support for the upcoming airdrop. However, Binance.us and Coinbase XRP holders will not be able to benefit from it. A crypto enthusiast retweeted by Flare Networks said, along with other crypto exchanges, OKEx will enable XRP holders leveraging their services to benefit from the Spark airdrop program. It is the latest trading platform to have joined, as a growing number of leading exchanges such as Binance, Bithumb, Bitstamp, Poloniex, KuCoin, and more have said that the cryptocurrency distribution would be made available to their XRP holders. Per OKEx's official Twitter announcement. $XRP deposits and withdrawals will be suspended from 12 p.m. UTC December 11th. Snapshot of users $XRP tokens at 12 a.m. UTC December 12th. After the snapshot, deposits and withdrawals will resume. How will Spark airdrop program work? December 12th is announced as the official date where Spark will be airdropped, but it will actually be the first step in Flare Network's initiative to distribute floor tokens to XRP holders. On December 12th, at 12 o'clock a.m. UTC, a snapshot of XRP holders' total amount of XRP will be taken by Flare Networks. Traders and investors who hold Ripple's native digital currency will be able to receive Spark tokens for free on a 1-to-1 ratio. The total amount of tokens to be distributed under the Spark airdrop program will be approximately 45 billion, made available to all XRP holders except for Ripple Labs. The upcoming release of tokens is said to have triggered an upward price movement for XRP. Flare Networks, the Ripple-backed smart contract utility fork, will then take into account XRP held on participating wallets and crypto exchanges. An actual distribution day for their native tokens is not known, although it is anticipated for some time between March and May 2021.
Oh, March and May. I didn't know that. I actually didn't know that. I thought we were going to be getting it faster. We ain't going to get it faster? I hope we get it faster, guys. I hope we get it faster, because I could use some flair. The flair. Ric Flair.
3 reasons why central bank digital currencies are a bad idea. From Tyler Durden on Zero Hedge News.
And this here is our actual main talking points for today. Yeah, that main talking points. 3 reasons why central bank digital currencies are a bad idea. First up, we have this great reset that's coming up. Don't know what's going to happen, but we do know that central bank digital currencies are a big factor into this. And there are some downsides to them, especially if you are someone who is like a free speech advocate, maybe you're a privacy advocate. There's a lot of things. Let's first dive into this real quick. I hope. Did this one break too? Let's find out. 3 reasons should be playing it are a bad idea. Was it supposed to have just curious. Would that be the reason? No? Sorry for the technical difficulties. But some of the main reasons as to why central bank digital currency is an issue is, as I mentioned, free speech, privacy. They are not friendly on those. So if you don't speak within the system will go ahead and kick you out. It'll
3 reasons why central bank digital currencies are a bad idea. 3 reasons why central bank digital currencies are a bad idea. They would not even compromise their stated intention of keeping the commercial banks in the picture. They would still serve as custodians of the token keys and even have the ability to issue credit along the traditional lines. This would lead to disastrous consequences. Economies get easily addicted to central banks' dope. With every new crisis, The chief monetarists have had to increase intervention doses the same way as junkies have to do with their drug of choice. As with every addiction, the longer it lasts and the stronger it grows, the more difficult it is to cure. And while monetary overdoses such as we've seen in Zimbabwe or Venezuela might not come for a long time, if ever, junkies don't perform well, as Japan's 3 lost decades of Bank of Japan, BOJ, interventions have demonstrated.
So, I again apologize that this bot is out of order, as I'm still building it up and still getting the tweaks out. Yeah, but so since it started over here, let's just quickly talk about it real quick. If central bank digital currency happens, they say that the first major thing is helicopter money. We're going to be airdropped money constantly. You have the next stimulus, you're going to have the UBI, you're going to have whatever things. And then it's just going to lead to a mass of inflation, possibly, unless there's good tokenomics between the things. But let's be realistic. Are they going to actually think about that? Probably not, right? Probably not. So.
2. Negative interest rates. Hoarding is evil, or so the modern monetarist's narrative goes. In the Keynesian framework, there is no space for the function of cash as a hedge in times of uncertainty. Savings are just money that doesn't work in spurring the miracles of spending and money supply-driven economic growth. Negative interest rates, then, are potentially the most effective method of preventing hoarding, by incentivizing savings account holders to spend their depreciating balances. Currently, the central banks have to rely on commercial banks to pass the negative interest rates on to their customers, but commercial banks instead are trying to convince the account holders to move their deposits from negative-yielding accounts to interest-yielding products and are consuming the negative rates on most of the outstanding cash balances.
Technically, negative interest rates is a good idea for economic recovery. However, for an individual person, that's a really freaking scary idea. It means that I'm going to pay you to hold my money. Why would I do that? Like, you were supposed to like borrow my money and give me money for holding my money. But no, because now they got to start paying for all this stuff, you know?
With the central bank tokens being tied more tightly to their issuance authority, it would be much easier for the monetary interventionists to impose negative interest rates on all tokens in circulation. This would certainly increase the consumers' and businesses' propensity to spend and would also drive asset prices up as people tried to offload their cash savings. But to think of this as something beneficial is foolish. It was massive spending, record low savings, and unsustainable asset valuations that led to the credit bubbles and crises of the past decades. To think that more of the same recipe will lead to a different, let alone better, outcome is ludicrous. The final major implication of cash tokenization is the potential it creates for financial surveillance. The central banks are ostensibly introducing digital tokens to protect people's privacy in the face of those reducing their anonymous cash usage. But the idea that a branch of government that imposes CAG, AML rules on existing crypto token platforms, limits physical cash use to prevent tax avoidance, and uses financial surveillance to catch non-violent criminals cares about our privacy is laughable.
So it says CAG, but it's KYC, know your customer, anti-money laundering rules. That means that usually if you sign up for like a crypto service, you're going to want to have a ID presented to whatever exchange. That's so that they have everything on paper in case they suspect that you might be tax evading or money laundering. In fact, the IRS is trying to go after Monero because they're like, we don't like this idea of privacy. Privacy? No, you can't be private from us. We want to see what you're doing. Big Brother wants to know. Big Brother always wants to know. I mean, I'm like a big brother, you know, and I want to know. So, I mean, I get it. They want to know. So that you're not going to have privacy. No more.
They're not even hiding the fact that tokenization of money would allow them to run what they call data analytics. To think that they would not make the leap from aggregate analytics to individual data processing would be naive. It's not a coincidence that China is the global leader in CBDCs. The surveillance potential of centralized tokenization is extremely attractive to a government that tries to keep tabs on every aspect of the lives of their underlings. Pro-CBDC arguments are misleading. The proponents of the central banking tokens argue that consumers need to be protected against targeted attacks on a country's payment network. While such a risk exists, for example, if a country like Switzerland tried to provide anonymity for foreign depositors, as it used to, and as a result Visa and MasterCard were pressured to shut down their payment networks for the country, if it materializes, the economy can always temporarily revert to cash, supported by a vast network of local ATMs and bank branches. Central bank digital currencies, CBDC, are being sold with the narrative of protecting consumers who are increasingly moving to cashless payments. Some say that these cashless payments will rob us of the privacy advantages of cash while exposing us to bank runs, payment network blackouts, and foreign financial adversaries. If anything, the biggest attacks on monetary exchange in the Western world have come from the governments themselves suspending or limiting cash withdrawals in times of liquidity crises, as was the case in Cyprus or Greece, not to mention that central banks themselves caused those crises with their credit bubbles of the preceding periods. The argument about the protection of consumer privacy doesn't pass the laugh test considering the history of continuous erosion of financial privacy by central banks and financial regulators. CBDCs will come and will make things worse. In conclusion, the reasons why central banks champion CBDCs are the strongest reasons for which people should oppose the transition toward them. But while the pretense of an investigation into fiat money tokenization gives the impression of there being a debate on the topic, the reality is that there is no debate. The digital currencies will go through and give central banks more control than they had before, with all the disastrous consequences such control brings. Yet while these risks are real, they would be negligible had it not been for the central banking and financial regulators' interventions into the market. CBDCs make these interventions worse and introduce some new, much bigger ones. While the stated intention behind CBDCs is to keep the commercial banks in the picture, these digital currencies will bring their end users closer to the central banks. This is because blockchains and blockchain-inspired distributed ledger technologies are built on a single common ledger, which is distributed either in a permissionless or permissioned manner. The permissionless distribution exposes a lot of information about the network participants, but in combination with proof-of-work verification makes it very difficult for an adversary to attack and overtake the network and, for example, change the inflation rate. A permissioned network with no proof-of-work or similar consensus algorithm not only doesn't provide the immutability feature, but by having a single permissioned ledger gives potential control to those who grant the network privileges. As a result, the central bank as the ultimate permission issuer would have much stronger control over the monetary system and payment network than it is right now.
And that's why they want it. Got to get that power. All the power.
This gives the central banks three very dangerous capabilities. The reason why we've seen such an elevated business cycle over the past century is the central banking fiat money system. Unnatural expansion of the money supply causes booms, which are unsustainable, and markets try to clear them when they are exposed as such. The problem is that the current design of the banking system requires the intermediary role of commercial banks in issuing credit to businesses. Central banks get frustrated when the commercial banks exercise caution in an economy that hasn't fully cleared the previous misallocations and hasn't brought prices of capital goods to more sustainable levels. Needless to say, commercial banks' cautious approach to consumer credit in a period of growing unemployment doesn't align well with the central bank's goals either. During the COVID crisis, the governments managed to an extent to get around these hurdles by issuing benefits en masse, but those are complicated by logistics, bureaucracy, or legislation. Since the predominant Keynesian narrative is that spending drives the economy, hint, it doesn't, capital investments do, the central banks would like to spur more consumer spending by issuing money supply directly to consumers. With closer integration of the monetary spigot and the end consumers and businesses, the central bank can much more easily issue credit or just outright cash outs to the private individuals and commercial entities by simply airdropping new tokens to the existing users.
So, yeah, negative interest rates, helicopter money, surveillance. They don't really talk about the freedom of speech aspect, but obviously, if you don't play ball within their ecosystem, you out. The fourth industrial revolution, let's just say hypothetically, we get these automated taxi cabs driving around, self-driving cars, and they don't like you. You can't get yourself a cab no more. They don't like you, you can't participate in the global economy. You can't shop, maybe, maybe they'll cut you out. Something that people in China is worried about with their current CBDC. Now, whether or not that'll hit the US very hard, I don't know. Hopefully not, but there's still going to be a lot of these elements in here that, yeah, like, I don't really see financial surveillance being like too big of an issue. I mean, it is an issue, but like the common adage is, if you're not doing anything wrong, why worry, right? That's true. Why should you worry? So financial surveillance, not a big problem. However, it's still your right to privacy. People don't need to know every single little detail about you. They don't. That's not their right. They are not you. So why should they have that information on you? Like, just that's a violation. But with this whole financial surveillance, if you don't comply, like they'll say, oh, we're targeting the criminals. Right. That's what you're going to start with. And then you're going to start hitting any political actors that you don't like. Then you're going to start hitting regular citizens that follow those political actors. Then you're going to start hitting people of ideologies. Now, it's a slippery slope.
Here we have. ECB secretly made dozens of private calls to select investors after Lagarde's announcement debacles.
Did this one break too? It seems like at the end, a lot of my things just start breaking. ECB. Oh, gotta get rid of this, huh? Okay. Try it again. There we go. So, talking a little bit more on the banking evils and just understand what is going on with this.
ECB secretly made dozens of private calls to select investors after Lagarde's announcement debacles. ECB secretly made dozens of private calls to select investors after Lagarde's announcement debacles. You don't just pick up the phone and talk to the select few, said the always aptly named Panicos Demetriades, a former member of the ECB's rate-setting committee as head of Cyprus's central bank. Talking only to the big players is what you're not supposed to be doing as the central bank. It's not helpful for relations with the public.
That's it?
In line with our transparency policies, we publish the names of the institutions where they work and ensure there is a rotation between institutions, the spokesman said. The purpose is to hear the views of economists who are ECB watchers and address any technical questions. The calls only touch on public information and their only focus is on the policy decision published beforehand. The ECB admits that there is a select group of ultra VIPs who are privy to information that the rest of the world has to only guess at. A closer look at these VIPs. They included investors such as XRP, BlackRock Incorporated and Pacific Investment Management Co., and banks such as Citigroup Incorporated, Deutsche Bank AG, Goldman Sachs Group Incorporated, JP Morgan Chase & Company and UBS Group AG.
How many of these are participating in this new financial race? Hint, it's all of the above. It's the CBDC groups. It's the high-end digital investment groups. It's the Illuminati. Oh, I think I messed that up. Oh, I accidentally closed it, huh? Whoopsies.
It would be desirable for all players to have access to relevant information at the same time. Otherwise, it's not a level playing field. Lagarde has recently positioned herself as a huge backer of erasing the wealth divide, which central banks are responsible for, and just yesterday congratulated the new Treasury Secretary Janet Yellen, whose motto is to restore the American dream.
On that particular part, where is that? This lady here. So this is Lagarde, and this is Biden's Treasury pick. Interesting. I mean, them being friends together because they're women, not that big of a deal, but it's the idea that what is going on, because I feel like that's
one wonders just how bringing power to the people works by only making a handful of close ECB followers richer with material, non-public information. One of the biggest lies that has bizarrely persisted over the past century is that central banks are somehow working on behalf of the people. Nothing could be further from the truth, unless of course one's definition of people are those high net worth individuals whose assets are in the billions. Today we get another confirmation that the ECB is no different. The European Central Bank's chief economist made dozens of private calls to banks and investors after policy meetings this year in what the ECB called an unusual attempt to buttress the central bank's sometimes puzzling public communications. According to the report, the calls began in March, after the ECB's completely clueless and communications challenged President Christine Lagarde, whose most recent success was crushing the reputation of the IMF, which lost tens of billions in its latest bailout of Argentina, stunned traders by suggesting at a news conference that the central bank wouldn't prop up Italy's bond market. And since it is borderline illegal for a central banker to spark any selling, and since Italian stocks and bonds slumped after her comments, this sparked a panic at the ECB, where hours later the chief economist, Philip Lane, placed separate calls to 11 banks and investors in which he sought to clarify Lagarde's message. Translation: he explained to a highly privileged group of ultra-wealthy investors not to sell their bonds because Lagarde had no idea what she was saying, and that he would make it clear to her what she meant to say.
news for the classes, not the masses. So it's like inside trading is what I'm getting out of this.
Of course, this is hardly the first time the ECB has gotten in trouble for sharing market-moving confidential information with a group of close friends. It's merely the last time. And the optics are as horrible as ever. Indeed, as the Wall Street Journal writes, citing former central bank officials, odd how it's always former central bank officials who tell the truth, never current ones, said the calls risked privileging big investors with sensitive information. Since then, the ECB was especially careful not to get caught leaking central bank flow information. Until Lagarde took over and immediately found herself in a historic crisis, where every word mattered.
So, yeah. They just play a game between themselves. So, back to the original question. Why are CBDCs bad? Why are they crazy? Because they're for the banks. It's for the powerhouses. It's not for the people. I want to believe Bitcoin is for the people. But I also believe it's probably one of their propaganda machines. I feel like at the end of this, nobody wins. Nobody wins. Except for those that were in the know in this particular time. Because when this takes off, it's going to be a sad day, but it's going to be a good day. I mean, good on my own personal bank account, but not maybe good for the humanity. And good for people. And it's sad.
John Kerry reveals Biden's devotion to radical Great Reset movement.
And just this here, man. Everybody is on board with this stupid Great Reset. They want it. They want it bad. I was listening to a guest that was on Tim Pool's podcast thing, and his guy was like, this sounds so good. And it's like, dude, you're only looking at it from the perspective of the now. If you're looking at it from the perspective of the now, of like, oh yeah, we need to help people. Duh. Yeah, of course we need to help people. But if you look at it from the larger perspective, the bigger data, they ain't looking that far. It's like they're looking at the minute charts, and I'm looking at like the monthly charts. That's the comparison right now. That's how people are reacting. Oh, and then this one is also broke. Like, why the last bit of my articles want to not work? Huh? It's because the last part of my naming convention. See, it's one lame. Get rid of that. Alright. But yeah, I mean, look, this guy here, he's just like, I wanna make sure everybody knows we're gonna be all on board for the Great Reset. We're gonna do it just because we know that it's good for the people, but it's really good for our bank accounts. It's good for the power to be. It's only good for the power to be.
Here we have John Kerry reveals Biden's devotion to radical Great Reset movement. Posted by The Hill. John Kerry reveals Biden's devotion to radical Great Reset movement. In June, elites at important international institutions such as the World Economic Forum and the United Nations launched a far-reaching campaign to reset the global economy. As World Economic Forum, WEF, head Klaus Schwab wrote back in June, the world must act jointly and swiftly to revamp all aspects of our societies and economies, from education to social contracts and working conditions. Every country, from the United States to China, must participate, and every industry, from oil and gas to tech, must be transformed. In short, we need a great reset of capitalism. Internationally, the Great Reset has already been backed by influential leaders, activists, academics and institutions. In addition to the World Economic Forum and United Nations, the Great Reset movement counts among its the International Monetary Fund, heads of state, Greenpeace and CEOs and presidents of large corporations and financial institutions such as Microsoft and MasterCard. But in America, most policymakers, including President-elect Joe Biden, have been relatively quiet about the Great Reset, leaving many to speculate what a Biden administration would do to support or oppose this radical plan. Former Secretary of State John Kerry, Biden's would-be special presidential envoy for climate, firmly declared that the Biden administration will support the Great Reset and that the Great Reset will happen with greater speed and with greater intensity than a lot of people might imagine. And yes, the Great Reset, will happen, Kerry continued. And I think it will happen with greater speed and with greater intensity than a lot of people might imagine. In effect, the citizens of the United States have just done a Great Reset. We've done a Great Reset. And it was a record level of voting. Kerry later argued that the Great Reset is necessary to slow the climate crisis and that I know Joe Biden believes. It's not enough just to rejoin Paris, the Paris Climate Accords, for the United States. It's not enough for us to just do the minimum of what Paris requires. Kerry also said that because of the Great Reset movement, he believes we're at the dawn of an extremely exciting time and that the greatest opportunity we have to address social and economic problems is dealing with the climate crisis.
So, that's pretty much that. So, with all this being said, everybody's like, we gotta go do it, but I'm saying, like, look, we know that helping people is the right idea. Wanting these things is the right idea, but there's consequences to it. Major consequences in the long run for individual people. They don't care. They really don't care. They're just like, no, we gotta make sure we help people. I'm like, I get it, but there's ways to go about it. And here's the thing. Gotta start teaching people how to help themselves. If you can't help yourself, then what's the point? And most people are at a point where they can't help themselves because they've been conditioned, they've been beaten down, they've been forced to do certain things. And I don't think it's impossible, but those people think it's impossible. But it's not. There's hope. There's ways to do it. My next thing that I'm going to end up showing here is something that is going to help with that. If you think you might have a way to explain the value of money, the value of what the economic system should be like, and including what's coming forward in the fourth industrial revolution of automation and robots and what's going to happen. My next guest is none other
Here
than
we have On Money, Guilt, and the End by Alan Watts, complete lecture and transcript.
Heck yeah. So let me go ahead and play this, because this here is so important. I found this and I was like, I have to share it. I have to. Like this literally talks about the Great Reset. But this was before his time. This guy's dead. So how does that be? How does this guy get the information that we need today, but he had back then? And then people today don't have this information.
One of the reasons that our technology is impeded and prevented from feeding the world properly is the failure of one of our networks. It's an information network, and it's called money, about which we have the most unbelievable superstitions and psychological blocks, which have been gone into at some length by Freud, who equates our valuation of money with our attitude to excrement, and a very complicated lot of complexes grow up around that. But money and our psychological attitude to money is a major obstacle to a proper development of technology, enabling it to do what it is supposed to do, that is, to save labor and to produce goods, services, and so on adequately. So I must introduce this with a story which is entirely legendary, indeed quite apocryphal. The great banks of the world at one time got absolutely sick of the expense and security measures involved in shipping consignments of gold from one bank to another. And so they decided that all the chief banks of the world would open offices on a certain island in the South Pacific, which was balmy and comfortable. And there they would store all the gold in the world. And they put it in great subterranean vaults reached by deep elevator shafts. And then all they had to do when one bank or one country owed gold to another was to trundle it across the street. And this was very efficient. And it went on beautifully for 5 or 6 years. And then the presidents of the world banks got together and said, let's have a convention out on this island and take our wives and families. So about 7 years from the date of opening, all those presidents and their wives and families went out to this Pacific island, and they inspected the books, and everything was beautifully in order. Then the children said, oh, Daddy, can't we see the gold? They said, of course you may see the gold. And they said to the managers, let's take our children down to the vaults and show them the gold. And the managers said, well, it's a little bit inconvenient at this time, and perhaps the children would not really be very interested. After all, it's just only old plain gold. And the president said, oh, no, come now. They'd be thrilled. Let's go down and see. And there was further humming and hawing and delays. And finally it came out that a few years before there had been a catastrophic subterranean earthquake. And all the vaults had been swallowed up and all the gold had disappeared. But so far as the bookkeeping was concerned, everything was in perfect order. What this means then is that money is nothing but bookkeeping. It is figures. It is a way of measuring what you owe the community and what the community owes you. It is, of course, as you all know, a substitute for barter. If you worked on a farm and the farmer paid you in terms of ears of corn, onions, cabbages, and other vegetables, and yet you wanted a pot and pan of some kind, and you took a few vegetables over to the man who so made pots and pans, and you swapped. Some people used cowrie shells to stand for money so that you wouldn't have to barter and carry around all these inconvenient loads of goods. And then, of course, gold was used because gold was rare and because gold was supposed to have a constant value. You might ponder the question, when a banker buys gold, with what does he pay for it? The answer is a mystery called credit. Credit is bookkeeping. And as the economy of the Western world developed, it was found that there was not enough gold around, if it were to remain constant in value, to exchange goods and services. You could, of course, have changed the picture by putting down the price of goods and services to keep pace with the amount of gold in circulation. But nobody will ever put down the price. There's something in our psychology whereby prices always tend to go up. But at the same time, therefore, because the amount of gold in the world did not provide an adequate channel for the circulation of goods and services, all great industrial nations went heavily into debt. They created a thing called the national debt, which year by year gets bigger and bigger and bigger, to the horror and consternation of old-fashioned Republicans who pay their bills. But the reason for the increase of the national debt is extremely obvious. It is that with an expanding gross national product, there needs to be more and more money, that is to say, tokens of exchange, in order to circulate the amount of goods produced, which is ever increasing. Now, I'm not an economist, and I can refer you to the work of those who really are. But any fool can see certain extremely fundamental principles about this whole situation. And I'm speaking of the thought today of a man called Robert Theobald, who sort of ties in with the general picture of people like McLuhan and Buckminster Fuller, in having very far-out thoughts and very adventurous thoughts about what we should do about money. But he is in the following of a man like Frederick Soddy, who was a Nobel Prize chemist, who was one of the first people to think really freshly about economics, or people like Silvio Gesell in Austria and Major Douglas in England. He's in that following. And the proposition that he puts forward is very simple. That money is a circulation of information, and in itself has no value. Gold, of course, has some value. It has some value for industry, and some value for dentistry, and some value for jewelry. But as a means of exchanging the goods and services of the world, it is as primitive as post horses for carrying the mail. We must recognize then that money is a pure abstraction. I was on a television show a little while ago with Ted Sorensen and Raymond Moley. And they were having a long, long discussion, which sounded like something that goes on in a smoke-filled back room of party bosses, where they were talking about the prospects for the Republican Democratic parties in 1968. And then they got onto the question of automation and the problems of unemployment that it was making and the difficulties of transferring workers from this to that when they were only trained for this. Finally, I said, the trouble with you gentlemen is you still think money is real. And they looked at me and sort of said, oh, someone who doesn't think money is real, because everybody knows money is money and it's very important. But it just isn't real at all, because it has the same relationship to real wealth, that is to say to actual goods and services, that words have to meaning, that words have to the physical world. And as words are not the physical world, money is not wealth. It only is an accounting of available energy, economic energy. Now, what happens then when you introduce technology into production? You produce enormous quantities of goods by technological methods. But at the same time, you put people out of work. You can say, oh, but it always creates more jobs. There will always be more jobs, yes. But they will be, lots of them will be futile jobs. They will be jobs making every kind of frippery and unnecessary contraption. And one will also at the same time have to beguile the public into feeling that they need and want these completely unnecessary things that aren't even beautiful. And therefore an enormous amount of nonsense employment and busy work, bureaucratic and otherwise, it has to be created in order to keep people working. Because we believe, as good Protestants, that the devil finds work for idle hands to do. But the basic principle of the whole thing has been completely overlooked. That the purpose of the machine is to make drudgery unnecessary. And if we don't allow it to achieve its purpose, we live in a constant state of self-frustration. So then if a given manufacturer automates his plant and dismisses his labor force, and they have to operate on a very much diminished income, say some sort of dole, the manufacturer suddenly finds that the public does not have the wherewithal to buy his products. And therefore he has invested in this expensive automative machinery to no purpose. And therefore, obviously, the public has to be provided with the means of purchasing what the machines produce. People say, that's not fair. Where's the money going to come from? Who's going to pay for it? The answer is the machine. The machine pays for it. Because the machine works for the manufacturer and for the community. This is not saying, you see, that this is not the statist communist idea that you expropriate the manufacturer and say you can't own and run this factory anymore, it is owned by the government. It is only saying that the government or the people have to be responsible for issuing to themselves sufficient credit to circulate the goods they are producing and have to balance the measuring standard of money with the gross national product. That means that taxation is obsolete, completely obsolete. It ought to go the other way. Theobald points out that every individual should be assured of a minimum income. Now you see, that absolutely horrifies most people. Say all these wastrels, these people who are out of a job because they're really lazy, see, given them money? Yeah. because otherwise the machines can't work. They come to blockage. This was the situation of the Great Depression, when here we were still, in a material sense, a very rich country, with plenty of fields and farms and mines and factories, everything going. But suddenly, because of a psychological hang-up, because of a mysterious mumbo-jumbo about the economy, about the banking, we were all miserable and poor, starving in the midst of plenty, just because of a psychological hang-up. And that hang-up is that money is real, and that people ought to suffer in order to get it. But the whole point of the machine is to relieve you of that suffering. It is an ingenuity. You see, we are psychologically back in the 17th century.
What happens to your Bitcoin when you die? From Cointelegraph.com. What happens to your Bitcoin when you die? Those discussions about inheriting your Bitcoins are of more than academic interest. My Bitcoins are stored in our safe deposit box, and my son and daughter are tech-savvy. I think they're safe enough. I'm comfortable with my legacy. This crypto inheritance practice is straightforward but may not be suitable for everyone in the crypto community. This way of bequeathing Bitcoin could be also considered risky, as shared keys come with the responsibility of keeping those assets secure. If you choose this method, be sure that your heirs are aware of the plan and some best practices for crypto security. Despite the Bitcoin network itself not caring about things like inheritance, some crypto services allow family members of a deceased client to access their crypto assets. Major United States-based cryptocurrency exchange and wallet service Coinbase, for example, allows the bereaved to gain access to a family member's assets after providing a number of documents including a death certificate and a last will. Coinbase users can also name a beneficiary on their Coinbase account. However, the procedure is not supported directly through Coinbase but rather using the services of an estate planning attorney. A spokesperson for Binance, the world's largest crypto exchange, told Cointelegraph that the company has similar policies for providing access to crypto beneficiaries but did not elaborate on the process. The beneficiary should contact customer support directly where one of our agents can guide them through the process, the representative said. Companies such as Safehaven, Casa and Trustverse are working on their own solutions that allow people to bequeath their crypto assets using blockchain technology and cryptography. Officially launched in September, Safehaven's digital inheritance platform Inherity allows users to bequeath access not only to cryptocurrencies like Bitcoin but also to social media profiles like Facebook and Google+. Safehaven's CEO, Dujardin Logino, said that neither Safehaven nor Inherity will ever store any digital assets themselves but rather provide a service to store encrypted information to the assets in question. It is 100% your decision who gets a safe key since Safehaven or the platform Inherity has no idea what you are encrypting, said Logino. In the last few weeks we have seen our platform grow to more than 1,000 unique users in the space. With the COVID-19 situation we are experiencing a huge demand from crypto and non-crypto people for our solution. While specialized services may offer a tailor-made solution to the crypto inheritance problem, they are generally in their early stages of development and also charge a fee. According to Logino, each backup share by Safehaven costs about $20 to $40 in the firm's native token, SHA. A standard edition solution also charges a $5 monthly subscription. Pass on your crypto to the next generation. According to a 2020 study by the Cremation Institute, nearly about what will happen to their crypto after they pass away. Furthermore, despite a high level of concern, crypto holders are reportedly 4 times less likely to use wills for inheritances than non-crypto investors. According to a 2020 study by the Cremation Institute, nearly 90% of crypto owners are worried about what will happen to their crypto after they pass away.